Hey guys, this is Arif coming back with another video on Robinhood. So today I'm going to be talking about one of the questions one of my members here in Discord asked me, and this question comes from Nithya. This person asked, since I'm a beginner, I want to know when to enter a share and when to exit. That's a big confusion to me. Throw me some light. So I'm going to talk about that question today. I'm basically going to be answering and highlighting that question. So the main question people have is, when do I enter a stock and when do I exit? How do I know when is the best time to enter? How do I know when is the best time to exit? The first question I can answer. The second question is up to you. So the first question is, when do you enter a stock? How do you know? So you can go to Yahoo Finance, and Yahoo Finance has great charts that you can take a look at. It comes with all the information almost for free, so you can search for a stock. You can see what's trending over here. So you can see that PLTR is currently trending, and you can go ahead and click on a stock that is currently trending, and then you can see the stocks on the company. You can take a look at everything here, and you can see the average volume, and you can see the actual volume. So the volume here is, the actual volume is just how much it's normally traded versus average volume on how much is being traded at the moment, with exchanging the market, like changing hands. Basically, someone is buying, someone is selling. This is the normal volume, and this is more than normal volume, so they call it average volume is 58. So when to buy a stock? So when I look at the volume is at least twice as higher than the regular volume. So the average volume to me has to have at least double the volume of the regular volume. So you can see here regular volume is about 30, here's about almost 60, so that's almost double. But most stocks here are quadruple. So let's go to Tesla to give you an example. So if we go up to Tesla here, we can see Tesla is currently sitting at 845, and if we go down, we can see the average volume here at 44 and the regular volume is 30. But you might want to say like, oh hey, why is that only 15,000 extra and not anything more than that? So basically Tesla is being traded every single day, and if we open up the Robinhood app here, and you can see, if we go to Tesla, you can see that Tesla here is showing at 847 aftermarket, and here is showing before market. So here went up by $3 aftermarket. So if we go down to the analytics here, then we can see here, we can see the stock volume here. So over here you can see the high, low, average volume, market cap, and then the regular volume. So here over here we can see the market cap, we can see the average volume here, and the regular volume. So you can see here, and here is two different charts. This one was aftermarket, this is the aftermarket as well, but it's more traded on Robinhood, so it's going to show you the accurate information here. Also it's accurate here as well. So here shows 50 million, and here it says 44 is the average volume, which to me is a good term, because if you are looking at Tesla for a long call or anything like that, you will see Tesla's prices constantly changing and everything. So one of the questions that they asked me was, how do you know when to get into a Tesla or any other company? How do you know which company is going to do well? So one of the ways that I look at it is the volume, because the volume matters. If, for example, let's say there's not enough volume in a stock, you're not going to see a lot of trades going on. So for example, you might place an order saying, okay, I want to buy Tesla at $845, and someone has to sell that stock. So if nobody's selling that stock for $845, you're not going to be able to buy it. So the only way you can buy it is if someone is selling the stock for $845. So if there's no volume, then you're not going to make that. In order for you to make it, you need to be able to have that volume, like people constantly buying, selling, buying, selling, buying, selling. On Webull, we can actually go ahead and see through that entire process. But in Robinhood, it doesn't show that, but it's still good. So to answer that question here, I'm going to show you first how I enter the calls and how I find my shares, like basically what am I looking at for the day. So I go to the Yahoo Finance and I search for here whatever I need to search for. Then I look at what's trending at the moment. Then we can see, I can go to Google and I type in stocks to buy now, and you can see promising prices also on Yahoo Finance, and you can go through these lists over here and see what stock is currently trending. So this is how I find stocks, and I also find stocks based on the amount of hype that the stocks get, and the most of the time the stocks that I find are on Yahoo Finance. Also, I look at Robinhood, and Robinhood has a great platform where it shows you the 100 most popular, and then it shows you the daily movers. So when I go through these things, I look at what is 100 most popular to me, what's daily movers. So if we go on to daily movers, we can see what is trending the highest at the moment. So you can see here, IDEX is up 29% today, and their market cap is 1.4 billion. So one of the best thing is that Robinhood actually shows you everything here. And the question asked, since I'm a beginner, I want to know when to enter a share and when to exit. So this is how I look for shares and how I enter a stock, but getting out is completely up to you. Let's say, for example, here we're gonna choose FuelCell Energy because this is the one I was in recently. So if we choose FuelCell Energy, we can see the stocks and everything that is going on at the moment. So this is the question that I had received, and I'm gonna go ahead and cover that question right now. FCEL pulled up over here, so you can read about the company here. You can see how many employees they have, what their trending is like. They have no dividend. I will talk about dividend later in another video. You can see the average volume they have is 75 million. And let me show you, when I do the trades, I can go to buy fuel cell at the options price. So all the time when I do trades, I always go to trade whichever symbols that I'm looking at. I go down here and I can select it. And as I mentioned in my previous video, everything from this line over here, share price, everything from here all the way down is in the money. Anything from above here all the way up here is all out of the money. So for me personally, I like to be in the money, because if the stock decides to go down, you're not going to lose as much money as you would do with these stocks here. And we have the strike prices here, and if we open up here on the phone, we can also check that here. Some people might not know. So FCEL, here we have it. We can go to trade, and then we can go to trade options, and we can see the same exact information that is here. It's just two different interfaces. So for now, I'm going to go ahead and select February 19, and I'm going to also select February 19 on my phone. And we have the same call options here. So you can see that we have the 1730 on the left and 1730 on the right. From here, anything below is also the same thing. It's in the money, and anything above here is out of the money, as simplest way as I can say that. So you can see that the prices are also different here. So when I enter a share, I basically just choose the first one here, or you can go deeper into the money, but I like to stay here. This is my comfort zone. So you can choose this option, press continue, hit 1, select your limit price. This is the price you're saying, okay, I want to buy it when it drops to this price. I always set a limit order because I don't really chase stocks, so I like to put the lowest price that they're asking for, or 355 or 350, whichever goes through. So I'm gonna go ahead and select 360 for this example, and I can say good for a day. I explained about good for a day in my previous video, and then I'll go ahead and click review order, and I'll click submit. This is how I enter a stock, and getting out is completely up to you. But the strategy that I use when I get out of a stock is basically saying, okay, am I happy with the profit that I made with this stock today? So you can see here, I'm going to go down to the history of this stock, and I will show you exactly what I mean by that. So on December 30th, I bought the fuel cell call. I bought 2 contracts of it for $670, and this was supposed to expire on February 19. I bought the $9 call strike, and if you see right now, the exact $9 strike price would cost you $890. Here on the left, you can see $890 for the same strike call that I bought, but I bought it for 2 contracts for $670 on December 30th. It was cheaper for me then, and it was out of the money because the stock price was lower. It was hovering around $12, I believe. So I bought the $9 call on it. So I was able to get 2 contracts for $670. But if you're gonna get it now, it's gonna cost you $890, because remember, contracts are one contract is multiplied by 100 shares. So this is going to cost you $890, even though you can see that it's cheap, but it's going to cost you $890. So here I'm going to set the I'm going to go ahead and show you exactly what I mean. So here you can see that I bought this with a limit price of $335, and we recently selected the 360 call for that one, the first one here. And you can see I bought 2 contracts here, so I paid $670. And on January 13, if we go up to this chart over here for January 13, you can see on January 13 it hit high at $20. So when I sold it, you can check here, I sold it at 10:53 a.m. So I sold 2 contracts at 10:53 a.m. I was happy with the profit. There was enough profit for me in there. So at 10:53 a.m. and I'm gonna go to 10:53 a.m. here. So around this price I sold mine. I did miss that $20 strike price because I was just trying to get out of with my profit, because I was happy with this the profit that I made. So let's say you buy the call here at the $9 strike price. You paid $670, and next day you come back and you doubled your money already. That's when you get out. If you're happy with your profit, that's when you get out. There's no right time to get out. There's no wrong time to get out. You get out when you're happy with the profit. If you're not happy with the profit and the stock goes down, what I normally do is I hold the stock for a day or two and see if it goes up. And if I see there's no movement and it goes back up to the price that I paid, I normally just sell it, because there's not enough volume in the stock to go up or down. So I just sell it. But that's just my strategy that I use. And for here, you can see that I made $2,130, and I put in $670. So if we open up calculator here and we can do the calculation here, we have I earned $2,130, and if I subtract that with the price that I put in, $670, I made a total profit of $1,460. That is more than enough for me, so I got out of the stock. And this is how I get out of the stock, but everyone has different strategies on how to get out of a stock. But finding the stock and getting into the stock, getting out of it, is up to you. But everything else I've covered. If you have any other questions regarding this topic on how to buy it and when to sell it, you can always feel free to reach out to me. You can join the group as well. And if you have any questions, you can always reach out in the comment sections or something.